Hey guys, and welcome to today's episode. My name is Peter, and here on my channel I'm going to provide you with everything you need to know to navigate the stock market, crypto market, and the market macroeconomics in generally. Today I want to talk with you about a very exciting topic in the DeFi sector, about cryptocurrencies, and I want to inform you about what is going on right now on, in particular, the DeFiChain network, on the protocol, the blockchain DeFiChain, because there is some very exciting stuff happening there on the DEX and on the platform. And I want to talk with you today about decentralized stocks. And for that, we first have to find out what are decentralized stocks, what is the difference between the synthetics and the physical stocks, what are the advantages, the disadvantages, and how you can use this to produce revenue and yield. So first, I want to clarify what is already happening on several other platforms. What do we already know in the DeFi sector? And for that, we first dive into physical stocks that are already been traded on the blockchain. And you can do that already since, I think, like a year about. You can do that when you go, for example, to some of the major platforms in the space, for example, to Binance. And there you can buy the physical stock of some normally traded stocks, for example, Tesla. You can buy the SPY. And what you do there is that you go to the platform and you have there your deposits. And then you say, I want to change my deposits, my normal currencies or cryptocurrencies as well, for this particular stock. So what is then happening is that the Binance is giving you this kind of token what represents the value of a normal stock. And what they do is they buy on the open markets the physical late product, for example, a Berkshire stock. And the interesting thing is now that you don't have to go to another kind of broker. You don't have to make like this classification about whether you are like a known investor, that you are already like years in there, where the income comes from. It's so much easier, and you can also like hold there your cryptocurrencies. You can trade your stocks. Another advantage is that you can trade them now like 24/7 around the clock. This is a big advantage actually, because like over the weekend the brokers are closed, the Wall Street is closed, but the blockchain never sleeps. So that means you don't have to wait till Monday 9 a.m. when the stock market opens to trade your stocks. But you can also do that on Binance 7 days a week, 24/7 on the clock. Another advantage of that is that you can buy now a fraction of a share. So that means that, for example, when you have like, you have $500 in Bitcoin, for example, and you want to convert it into a Tesla stock, for example, you can now buy with this $500 in Bitcoin half a share of Tesla and hold it there. This is all very great. Big advantage there, but you still have to rely on a third party for making the transactions. And you have to rely that they actually there's a risk in there. So you have to trust them that they actually hold this stocks, the shares physically, and that they are backed. Another disadvantage there is, because it's a third party, they also want to have their share of the revenue there. And so there are some fees that are decreasing your margin. So they want to have something for their service. And now comes the new part. The new part right now, what's happening on the DeFi chain, for example, is that you don't hold a physical share of this company in particular, but you hold a token that reflects the price of the share. So that means generally, like a token is just like a series of zeros and ones, and it's just a code. And what you hold there is like when you buy this, for example, D Tesla, then you hold a fraction, or for example a whole one. You hold a fraction of the underlying value of this stock. So that means that you profit from an increase in price in there, and everything is totally decentralized. There is no third party which is involved in that. There's no one then to trust than code. And code is pure, so that means we trust in the blockchain, we trust in the technology, so this risk is already diminished. And what you then can also do is that you put these stocks then in the liquidity mining pools, and you get an additional yield for providing these D tokens in the liquidity mining. This is a very, very exciting strategy. For example, when you say you want to have an overall yield additionally, and the yields are very, very high right now. They are like around 90 to 150% on the stocks on the DeFi chain right now. So this is very, very adventurous when you, for example, also say, okay, maybe we go right now in times of sideways action, the general market is not going up or down, maybe we're also entering a bad trend now. And the advantage here is that you can still hold the asset, your stock for example, and you get additional yield for holding them. So that means when you say, okay, maybe we are going now in a bear market, the price really doesn't matter to you because you still get your revenue from the liquidity pool. I will go with you into detail and look into it in particular for the next video, but now I want you just first to get an overview, what are the advantages, and just letting you know what is happening there. Take a look at this, and next video I'm going to show you some of the strategies I am implementing and I'm going for with these assets on the DeFi chain blockchain. Till then, I wish you a good weekend and see you next time when I'm going to show you how you can make very profitable strategies with these stocks. All right, thank you. Bye bye.